Warren Buffett just made headlines by pouring over $500 million into these three stocks. This is a huge deal because Buffett has been sitting on the sidelines for months, leading many to believe he was bearish on the market. So what changed? Why is Buffett suddenly bullish and what stocks is he buying? In this video, we're going to break down Warren Buffett's latest investment moves so you can understand why he's buying Occidental Petroleum, Sirius XM and Verisign, and if you should too. First up we have Occidental Petroleum, an oil and gas company that's been absolutely crushing it lately. This company has been making waves in the industry with its impressive performance and strategic moves. Occidental Petroleum, often referred to as Oxy, has a rich history dating back to its founding in 1920. Over the years it has grown to become one of the largest oil and gas companies in the United States, with operations spanning across the globe. From its early days of exploration and production to its current status as a major player in the energy sector, Occidental has consistently demonstrated its ability to adapt and thrive in a highly competitive market. Buffett acquired 8.9 million more shares of Occidental Petroleum, NYSE, Oxy, between December 17 and December 19, according to filings with the SEC. He paid about $409 million total for the shares. After the purchase, Berkshire now owns approximately 28.2% of Occidental, but Buffett has said he has no plans of taking a majority stake in the business. Still, Occidental is one of Berkshire's largest holdings at this point. Not only does it own 28.2% of the company's common stock, but it also owns $8.3 billion worth of preferred shares of the company, earning an 8% dividend. Those shares include warrants to buy up to 83.9 million shares of common stock for $59.62 each. For a long time, Buffett would buy shares of Occidental whenever it traded below the price of his warrants. He'd let Occidental retire his preferred shares over time while he snatched up its common stock below his warrant price. But he's noticeably stayed away from Occidental shares since June despite trading well below that price for months. But at an average price of $46 per share, Buffett seems to think it's now worth adding to his position in Occidental. Occidental owns an envious position in the Permian Basin, which is the cheapest source of oil and natural gas in the United States. However, a mild winter combined with pipeline disruptions led to significant price increases for transporting natural gas. Meanwhile, oil prices fell considerably from their 2022 highs, but Occidental may be about turning things around. Third-quarter results came in better than expected based on strong production levels. Additionally, management laid out expectations at the start of 2024 that transport prices will move significantly lower, resulting in $300 million to $400 million per year in relative cost savings starting in the third quarter of 2025. It also expects its chemicals business to add an extra $300 million to $400 million in EBITDA once the overhaul of its battleground chemical plant facilities in Texas is complete. For a company that's produced $14 billion in EBITDA over the past 4 quarters, an $800 million boost on top of regular operational improvements could lead to considerable growth over the next couple of years. At a current enterprise value to EBITDA ratio of just 5.6, Occidental shares look like a bargain. It's no surprise Buffett couldn't help but add more shares at this price. In the most recent quarter, Occidental generated over $4 billion in free cash flow. That's insane. This level of cash flow not only highlights the company's operational efficiency, but also provides it with the financial flexibility to invest in growth opportunities, reduce debt, and return value to shareholders. And with oil prices still elevated, Occidental is poised to continue raking in cash. The current market environment, characterized by strong demand and limited supply, has created favorable conditions for oil producers like Occidental. As long as these dynamics persist, the company is well positioned to benefit from higher prices and increased profitability. But it's not just about the profits. Buffett's investment in Occidental is also driven by his confidence in the company's leadership and strategic vision. Buffett is also a big fan of Occidental's management team. The company's leadership, led by CEO 𝗣𝗟𝗏𝗧, has been instrumental in driving its success. He's called CEO 𝗣𝗟𝗏𝗧 a fantastic manager, and has praised her for her focus on shareholder value. 𝗟𝗏𝗧's strategic vision and commitment to operational excellence have earned her the respect and admiration of investors and industry peers alike. Under her leadership, Occidental has made significant strides in improving its financial performance and positioning itself for long-term success. And let's not forget about the dividend. Occidental's commitment to returning value to shareholders is evident in its dividend policy. Occidental currently pays a dividend yield of just over 1%, which might not sound like much, but it's actually quite generous in the oil and gas industry. The company's ability to maintain and potentially increase its dividend is a testament to its strong financial position and commitment to shareholder returns. Plus, with all that free cash flow, Occidental has plenty of room to increase its dividend in the future. This potential for dividend growth adds an additional layer of appeal for income-focused investors. Overall, Occidental Petroleum's strong financial performance, strategic vision, and commitment to shareholder value make it a compelling investment choice. And it's no wonder that Warren Buffett continues to bet big on this oil and gas giant. Next up, we have Sirius XM. The company represents a different kind of investment. As a leader in satellite radio, Sirius XM has revolutionized the way people consume audio content. The company offers a wide range of programming, including music, sports, news, and talk shows, catering to diverse audiences. Sirius XM's business model is built on subscription revenue, which provides a steady stream of income and reduces reliance on advertising. Berkshire Hathaway has been accumulating shares of Sirius XM Nasdaq Series since the third quarter of last year. The conglomerate previously owned nearly $1 billion worth of the company, but sold off the position between 2020 and 2021. The new position is thought to be headed by Berkshire manager Ted Weschler instead of Buffett himself. Berkshire built its position by buying shares of Sirius XM directly, but it also bought significant amounts of the Liberty Media tracking stock, which sold at a discount to become Sirius XM shares. When the two companies merged, Berkshire found itself with about $2.5 billion worth of the company. The additional $107 million it paid for nearly 5 million more shares brought its total stake in the company to $2.7 billion. Sirius XM management shared its 2025 outlook with investors earlier in December, disappointing many shareholders. It expects the company to generate revenue of $8.5 billion and EBITDA of $2.6 billion, both a decline from this year. On the other hand, it expects strong free cash flow conversion to provide a slight improvement in free cash flow, which it will use the majority of to pay down debt. But buying into this weakness could be a great opportunity for investors. Management expects free cash flow to grow to $1.8 billion long-term on the back of 50 million subscribers, up from about 39 million today. Many of those subscribers may come from its app-only offering that Sirius XM is using to compete with streaming service alternatives. It also sees an opportunity with its burgeoning ad business across podcasts and a fully ad-supported offering. Declining capital expenditures will also support growing free cash flow. Buffett's interest in Sirius XM is driven by the company's strong market position and its ability to generate consistent cash flow. The satellite radio provider has a loyal customer base and a unique value proposition that sets it apart from traditional radio and streaming services. By investing in Sirius XM, Buffett is betting on the continued growth of the subscription-based media model and the company's ability to innovate and expand its offerings. Shares currently trade for around 4 times analysts' 2025 consensus earnings estimate. That's an extremely low price for a company that's producing relatively stable earnings and growing free cash flow conversion. Lastly, Verisign, a global leader in domain name registry services and internet infrastructure, has also caught Buffett's attention. Verisign's critical role in maintaining the stability and security of the internet makes it a valuable asset in the digital age. Buffett first acquired shares of Verisign all the way back in 2012. He continued to build his position through mid-2014, but hadn't added any more until earlier this month, when he bought $45 million worth of the domain registry service provider. The most recent purchase brings his total stake in the business to $2.6 billion, about 13.6% of the company's shares. Verisign, a global leader in domain name registry services and internet infrastructure, is an intriguing investment. The company operates the .com and .net top-level domains, making it a critical player in the internet ecosystem. Verisign's business model is built on providing reliable and secure internet infrastructure, which is essential for the functioning of the global internet. Verisign recently renewed the former contract through 2030, while the net contract runs through mid-2029. The contract gives Verisign the right to increase the price for .com and .net domains during the last 4 years of their contracts by 7% and 10%, respectively. While there are a growing number of competing top-level domains, the letters coming after the dot in a domain name, .com and .net, remain by far the most popular. If you're serious about establishing a presence online, you probably want to own a .com or .net domain. That puts Verisign in a very powerful position, and it will probably take full advantage of its ability to raise prices over time. Verisign isn't at much risk of losing its contracts either. As long as it maintains certain service levels and provides critical infrastructure for the domain name system, its contracts will automatically renew. It's been able to do just that since acquiring the rights in 2000. With a growing number of people and businesses building their own websites, it should see small annual growth in registrations combined with regular increases in its registration fees. Verisign shares currently trade for about 23 times analysts' consensus earnings estimate for 2025. That's a fair price to pay for the stock, which should experience slow and steady revenue growth over time. Importantly, earnings should grow faster than revenue as price increases and the addition of new domains results in operating leverage. In a market where Buffett's finding it harder and harder to find good value, it makes sense that he came back to this old favorite. Buffett's investment in Verisign is a testament to his belief in the company's long-term growth potential and its ability to generate consistent returns. Verisign's strong market position, recurring revenue model, and focus on cybersecurity make it a compelling investment opportunity. By investing in Verisign, Buffett is betting on the continued growth of the internet and the increasing importance of secure and reliable online infrastructure. Innovation is at the heart of Verisign's strategy, with ongoing investments in technology and infrastructure to enhance its service offerings. This commitment to innovation ensures that Verisign remains at the forefront of the internet infrastructure industry. Verisign is also exploring new opportunities in emerging technologies such as cybersecurity and Internet of Things, IoT solutions. These initiatives could open up new revenue streams and drive future growth for the company. While each of these stocks, Occidental Petroleum, Sirius XM, and Verisign, faces its own set of challenges, their long-term prospects remain strong. Buffett's investments in these companies reflect his confidence in their ability to deliver consistent returns and navigate the complexities of their respective industries. For investors with a long-term perspective, these stocks may present attractive opportunities to invest in companies with solid fundamentals and growth potential. So there you have it. Those are the 3 stocks that Warren Buffett has been buying lately: Occidental Petroleum, Sirius XM, and Verisign. What do you think about his investment decisions in these companies? Let me know in the comments down below. If you enjoyed this video and found it helpful, please give a thumbs up and subscribe to the channel for more videos like this. And as always, thanks for watching.